In market news now, Asian markets fell on Thursday as investors turned their focus to a possible US-Russia showdown over Syria. President Trump tweeted that missiles will be coming to Syria, going against Russia's warning that any missiles heading in that direction would be shot down, as well as the positions from which they were launched. This development drove a negative sentiment in the US, with all three major indexes there falling, with Asian markets following suit. Tokyo stocks fell, with the Nikkei share index closing down 0.1%. Hong Kong stocks didn't fare better. The Hang Seng index slid 0.2%. And Chinese stocks got knocked the hardest, the Shanghai Composite Index losing 0.9%. And over in the United States, Wall Street stocks fell last night as President Donald Trump signaled possible U.S. military action against Syria. This stoked investor concerns about geopolitical risk, while Fed minutes released last night sparked worries of a more hawkish view on interest rate increases. The Dow Jones Industrial Average slid 0.9%. The S&P 500 lost 0.6%, while the Nasdaq Composite Index dropped 0.36%. While the local all-share index has been bobbing in and out of negative territory today, European stocks started on a downer but have since rebounded. Markets are certainly more generally risk-averse on geopolitical tensions between the US and Syria and its key ally Russia. Despite increased caution, the gold price has actually fallen. The local currency has lost some ground against the US dollar, having breached 12 against the US dollar earlier in the session. And in company news, Steinhoff sells a 6% chunk of its stake in Steinhoff Africa Retail, netting 3.75 billion rand. But is it enough to plug its massive debt hole? Let's take a look at the indicators. I'm joined by Anton van Niekerk. He's from NEFG. Thanks for joining us, sir.
Thank you.
Good stuff. So now, with the US now saying that all options are on the table in terms of military action against Syria, how is this playing out in global markets?
Well, as we know, Syria and Russia has been siding together, and this has put the USA and Russia on opposite sides, and we've seen increased fears creep into the market, and we've seen increased volatility globally. So it has impacted the markets, but if we take a look at US markets, we've only seen them going down only slightly. And this might be because Trump has been so radical with his tweets, and that could be because market participants don't think that it has such a big impact, but it should actually have. And then another thing to mention is that the US actually imposed sanctions against Russian government officials recently and some Russian companies. This has had a major influence on Russian markets. So the Russian market has gone down to 4-year lows. It's down 9% already. And the Russian ruble has gone down 10%, which is quite significant.
So presumably that would agitate Russia even more to be responsive if the US actually does take action.
Yes, definitely.
And then, of course, we've seen that the US dollar has strengthened, which is interesting, because I would have thought that with all the risk aversion around geopolitical risks, that it would weaken. Why has it strengthened, and what impact is it having on commodities?
Yes, so yesterday the Fed came out with their meeting minutes for March, and it was quite positive. A lot of the participants within the meeting said they expected GDP growth within the coming months, and they also expected very good inflation figures to come out. So this has been very positive. They actually revised GDP growth upwards to 2.7% from 2.5% for 2018. And 2019 GDP growth has also been revised upwards, which is also positive. It was revised upwards to 2.4% from 2.1%.
So when you say good growth and good inflation, you mean higher inflation. So in that context, higher inflation is a good thing, and presumably that means higher interest rates.
Exactly. So for the Fed, that's what they're targeting. That's what they want. They want inflation so they can put up rates. And the market's actually expecting another 2 rate hikes. But I think they might be surprised. Maybe they can get 3.
Let's see. And then let's look at Steinhoff. It's been on an asset sale spree, trying to obviously amass money to fill its debt hole and so on. It sold 6% of its stake in Steinhoff Africa Retail, accruing 3.75 billion rand. Now that sounds like quite a lot, but I think their debt is something like, I don't know, 10 billion euros or whatever it may be. So despite this, investors are really none the wiser about the value of it. I mean, now you can get a Steinhoff share for what, £2.50?
Exactly. So yeah, it's been quite a difficult time for Steinhoff, and I think this sell-off of Steinhoff Retail Africa shares will help them. But you know, they have another 70% to sell if they have to. So that's probably a good thing. But for us as investors, we struggle to value the company because we don't know what's going on within the company. We don't know what the financials are truly worth. We don't know what the company is truly worth because all the investigations are still ongoing. So the thing is, we can't put a price on the company, and therefore we don't invest in the company.
That makes sense. But now it's said that the PwC report that's being done will only come out at the end of the year. So what is the point in people trading on this thing?
I certainly don't know.
All right. And the other issue as well that came out with Steinhoff, that last September, August or so, Christo Wiese, who happens to be the chairman of Shoprite and of Steinhoff, he was paid 325 million euros by Steinhoff for the purchase of Shoprite shares. Was that a legal transaction, and is it ethical given that he's the chairman of both companies? Well,
according to him, he followed all the due process and all the he followed the legal way of receiving the payments. He actually said he received two payments, one payment for 200 million euros and one payment for 125 million euros. And it seems that he followed the right process of doing this. The bad thing is that Steinhoff Retail Africa and the merger with Shoprite didn't really happen. So, and that's mostly because of Steinhoff's accounting fraud. So,
And then lastly, on an macroeconomic number that came out, mining production, that rose by 3.1%. That's for the month of February on a year-on-year basis. Is it in line with expectations? And also, over and above that, the DMR came out and said the mining charter will be ready by May. So when you put all of this into the mix, what do you think the prospects are for the sector?
Well, prospects might look very good. If we look at the prior mining charter, it didn't look that good. So let's hope they can revise it properly and give it a go. And maybe foreign investors will be very interested. So that might be very positive for the mining stocks.
And in terms of the mining print, 3.1%, is that good? Is it bad?
Well, it's better than the prior period. So it's above the 2.6% production figures of the prior period, so it's better.
All right. Thanks very much, Anton, for your time as always. Anton van Niekerk, he's a portfolio manager at NEFG